Hello and welcome back to the EndeavorsAI podcast. I'm Collin McKee, founder of EndeavorsAI. We're an AI consultancy firm that builds workflows, agents, automations to help operators buy back their time so that leaders can focus on judgment, strategy, and decisions that actually require human experience. So in this show, it's not about hype and not about shiny tools. It's about how real operators and investors lead, think, and especially as technology reshapes how we work and capital moves. Today's conversation is one I've really been looking forward to. I'm joined by Seth Levine, founder of Foundry Group and one of the most thoughtful long-term venture firms in the industry. Seth has spent decades investing through multiple market cycles, and he's been deeply focused on how experience, judgment, and patience shape better capital allocation, especially now as AI enters the picture. This conversation is about capital evolution, not capital trends, about where AI helps and where it absolutely should not replace human judgment. So, Seth, I want to start by thanking you for joining and look forward to hearing your perspectives. I'd like to start with your origin story. You didn't just join venture capital, you helped co-found Foundry and with a very specific philosophy around themes, patience, and long-term thinking. Walk us through your path into venture and what motivated the decision to build Foundry the way that you did.
Well, first off, Colin, thank you for having me. It's a pleasure to be here and really appreciate the chance to have this conversation. Obviously, topics I think a lot about. What's interesting about founding Foundry is it was really informed by my work and my partner's work at previous venture firms. I had been in the venture industry since 2001. We founded Foundry in 2006, 2007. We started it in 2006. We raised our first fund in 2007. So I had a number of years in venture. The other three partners that I founded Foundry with had started in venture even before that. Brad had started in about maybe 96 or so, sort of officially in venture. He'd done some private investing before that. And my partners, Ryan and Jason, had started in the 99, 2000 timeframe. And so a lot of what we decided to do at Foundry was informed by having spent some time already in the venture industry. And there were a couple of key principles that were driving us. One was we all wanted to be together in the same office. Brad and I had been the Colorado office of this large billion-dollar Palo Alto-based venture firm. And we really felt like it was important for us to all be together. We wanted to work in overlapping ways, not in silos. We felt like many venture firms were very siloed, and it led to horse trading and sort of bad behavior, things like that. We wanted to have a completely flat, completely equal firm. We all own the firm together, and we share in the economics equally. We didn't want to have deal by deal attribution. We felt like every firm was a firm deal. And we're not alone in this, by the way. There are a bunch of venture firms that operate that way, but there's a bunch that track individual partners' track records. We didn't want to be doing those sorts of things because we wanted everyone to feel like they could jump in and help out. And that's led to some things like we sometimes switch board seats around, or sometimes the person who sees an investment first is not the person that does the due diligence, is not the person who ends up sitting on the board. And because they're all firm deals, there's no ego involved in that, right? We want the best person for that time, and we all share in the upside, and we share in that upside equally. So those are some of the things that we really felt were sort of foundational principles. And we really wanted to work on firm and firm building, which is interesting because when we started Foundry, we said to ourselves and to the world, we were not going to try to create a generational firm. And in fact, in 2023, right after we raised our last fund, we announced that indeed was what we were doing. We were not going to raise any more funds after that. But those two things were, for us, not in conflict. We wanted to spend real time working on our firm and being thoughtful about it. We actually hired an outside consultant, an organizational consultant. She's been with us since before Foundry even had a name, like before we even really sort of figured out exactly what we were doing. We were meeting with her, talking about how we would make decisions, how we would handle conflict, things like that. And she's been with us really the entire time, the 20-year now history of Foundry, even though we knew we weren't building a firm that was going to outlast us, right? And I think that's maybe an interesting observation because I think that some people would look at that and be like, well, you're not firm building, so, just do your thing and then you're done. But we really felt like we wanted to do it in a certain way and we wanted to be deliberate about it. And so we spent a lot of time really figuring out how we were going to make decisions together, how we were going to work together. And there's plenty of conflict at Foundry. Like, it's not like, I think people sometimes look on the outside and they're like, you guys are such great friends and you all get along. All of that is true. And we also disagree vehemently on, various things. And we have a really good vernacular and mechanism for having those conversations, which I think is really important, really for any working group, right? Whether that's inside a company or, in a family or in a venture partnership.
Right. Awesome. So with quite a track record, investing through multiple cycles since the early 2000s, post-financial crisis, zero rate environments, total recalibration from your seat, how has venture capital fundamentally changed over that time period?
I mean, in some ways, it hasn't changed at all, right? I mean, I was thinking about this. I read something the other day that the top 10 venture firms control about 80% of the capital in venture. And when I started in venture, it was similarly concentrated, maybe even slightly less concentrated than that. And then there was this explosion of emerging managers, and we were on the very front end of that. And I thought that was really positive for the venture industry. When I started in venture, there was a sort of a bit of a thought that you kind of need, as an LP, as an investor into venture firms, you needed to be in one of the top, say 5 or 10 venture firms, it wasn't worth investing in venture. And that narrative really changed significantly as great firms were built all over the country, right? So there's sort of two things embedded in that. One is there were lots of firms where you could drive really strong returns. And the second thing is those funds were not only located in the Bay Area and in Boston, right? Which is when I started in venture, was kind of the adage was like, you really needed to be. And it wasn't even San Francisco. It was truly the peninsula or in Boston. Now there are great firms. Foundry is one of them, right, in Colorado, but there are great firms all over the place, New York and Kansas City and Minneapolis. Pick your market. There are great firms being built there. And so from that perspective, it's changed a lot, but it was interesting to read that statistic that I started this answer with and realize, some things haven't changed at all, right? There's still some behemoth venture firms, and they do control a huge portion of the market.
Right. More things change, the more they stay the same, as they say.
Yeah.
So how has the profile of who actually becomes a venture capitalist changed? Does that actually change when it comes to founders and their outcomes?
I think that the profile is actually maybe the thing that's changed the most. When I first got into venture, it's funny. I'll tell you a story about interviewing for jobs in venture. I'd had several jobs out of college. My most recent job was working at a telecoms, datacomms company. And I was the corporate finance half of the CFO role. I ended up splitting the CFO role with our chief accounting officer. I led our IPO. A bunch of things, did a bunch of acquisitions. I had a big team working for me. Eventually, I sort of went into management for them. They wanted to sell off some divisions eventually. And I became the general manager of those divisions that we were selling off. A couple hundred people reporting up to me, and probably a $50 million P&L. And I just give you that context because I sold those businesses. They'd made me an offer to stay. I didn't want to stay at the company I was working for. And so I was networking into venture because I was looking for a venture job. And one of the companies, there weren't a lot in Boulder or in Colorado, but one of the companies that I was talking to said to me very directly, "We would really only look at you for an analyst role because we only hire MBAs as associates." And I said, "Okay, but I mean, I've just been running a $50 million business with 200 people reporting to me. I kind of skipped that. I skipped the MBA part of my journey, but, and they're like, "Yeah, no, we have a pretty hard and fast rule. You can't be an associate here without an MBA. And I just give you that story. And I was like, "Guys, I have MBAs who work for me now," right? I'm not going to take that. I was going to take a step back just being an associate, both in pay and just sort of whatever stature. And I was willing to do that, but that was a step too far. So I tell you that story, just like that was the mindset for a lot of firms, right? They were not alone in that. And so I think that was sort of the typical path of venture, right? You went to an investment bank, you then maybe worked for a year or two at a venture firm as an analyst, and then they probably paid for you to go to business school, and then you came back as an associate. And that was a very, very common path. I think that's much less common these days, right? That sounds more like a private equity path than a venture path. And a lot more VCs have some real operating background. And I think that that's better for founders. I think that those VCs that have that kind of direct experience, both are more impactful around the table, around the board table, but they're also, I think, more empathetic because they've sort of been in that seat before, having had to manage. Many of them were entrepreneurs themselves, and I think it brings with it a different relationship with the company and with founders than the more financially motivated, it's the oriented, if you will, sort of banker / MBA type that really did populate a lot of venture firms for many, many years, certainly in 2000, 2001, when I started in venture, that was the much more common path, right? And thank goodness for Brad, who hired me at SoftBank Venture Capital at the time, who did not feel stuck in that way and was like, I don't care if you have an MBA or don't have an MBA. That's not what tells me that you know how to do this work.
Right. Cool. So when you talk about, capital evolution, what were the early signs that made you really realize that the system itself was changing?
Yeah. So here we're talking about my new book, national bestseller, actually, that came out month and a half ago now as we're talking, called Capital Evolution. We'll put some information on it in the show notes. And really the book describes sort of the next generation of capitalism. And it asks a bunch of questions around the role of business and what should businesses do and not do, especially in an environment where trust in government, trust in the media has gone down so much. And really the impetus for the book came out of a conversation I had with the CEO. We were talking about sort of what the role of his company should be. Should he speak out on certain things? And he asked me very directly, would you take a lower return, but for us sort of living our values and specifically speaking our values more? And it was a really interesting question. I hadn't thought about it that way. And it was a time when a lot of businesses were speaking about all sorts of different issues that had nothing to do with their businesses, their core business. And I just kind of taken for granted. I hadn't thought deeply about it. And so it was a really thought-provoking question. I thought about it for a while. I called up a friend of mine who I'd written a previous book with. And I said, what do you think about this? This is really fascinating. And we talked about it. We ended up deciding to interview a couple people about it just to, sort of get a background, some other perspectives. We didn't necessarily have an idea that we'd write a book. And when we started asking people, well, what's the role of business in society? It really spurred a bunch of broader conversations around what's going on with capitalism itself. And maybe we're in a bit of a transition for capitalism, right? And it's signified by the fact that companies feel like they need to speak out on these things. And so we ended up deciding it was a really interesting topic. And it's funny because when I tell people, oh, the book's about the future of capitalism, like, everyone leans in. Everyone has an opinion on that. When we've done a bunch of book events, with sort of in front of live audiences, and people engage, and they engage deeply on this topic because people have opinions about it, and they also care viscerally about it. And by the way, it's important to note that something like 50% of people under 40 don't think capitalism works at all, right? So it wasn't, we knew that statistic, so we wrote the book a little bit in defense of capitalism. We don't go all the way through that, but it serves both as a defense of capitalism, but also as a sort of a call that this neoliberal version, shareholder only version that we've been living under for 50 years, maybe actually hasn't worked that well, or I should say hasn't worked as well as it should, right? It's driven incredible sort of top line growth, but we suffer from like Jeff Bezos problem, which is like Jeff Bezos walks into a bar of 100 people, the average person's a billionaire. It doesn't tell you anything about who's actually in the bar. And we sometimes, view economic statistics that way. And so on the one hand, capitalism has been incredibly effective. US style capitalism has been incredibly effective at growing sort of this massive economy that we have in the United States. On the other hand, it's led to a lot of disruption, inequality, probably the populism that we see both on the left and the right. And so we asked the question in the book, is there a better way, right? Is there a better way we should think about this? And sort of the subtext is, what's the role of business? And again, especially now that people don't trust government, people don't trust the media, business is sort of holding the bag. And we asked the question, do we want to live in a society where businesses have to speak out about every issue? And sort of where's the line? So we talked through that. We've got some answers, but it's not particularly prescriptive. We tried to write it in a way that was exploratory, that asked a lot of questions that challenge readers to think, but also in a way, I've been told by some people that it's a page turner. That may be going a little bit far, but it's written in a very accessible way, right? We wanted people to engage with this work. And I think that's why it became a national bestseller. I think people really gravitated toward the subject. There aren't a lot of books that sort of really dig into it. I mean, what's funny is there was a book on capitalism came out basically the same time, and it's like 1,000 pages. Right. I actually haven't read it because it's just so long. It's like such a doorstop. And I think, I'm sure it's great, but it's like, that's what you have if you want to read about capitalism,
Right.
or you have our much more accessible, 350-page book that's informed by a lot of interviews and a lot of research and a lot of thought.
Awesome. I look forward to it. It's in my queue. I've got a couple before it, but yeah, I'd encourage the audience. We will put a link to it in the description. And quick pause just to chat with the audience. If you're enjoying the conversation, we encourage you to like the episode, subscribe to the channel. There's a lot of interesting, varying conversations similar to this around AI and venture capital. And feel free to comment. If you've read Mr. Levine's book, let us know what you think. Give us some feedback or feedback on the show. We always welcome it. So, and turning now a little bit more to AI, because of course that's the title of my show. What have you seen so far that is actually producing real leverage in your environment that comes from AI automations, workflows, what have you? That's actually been very productive in buying back your time for you.
Yeah. So the first thing I usually say to people, I'm curious. You've got a more advanced audience to AI, but we're not even at the first inning, right? Like we're at like the first pitch. It's so early, and that to me, that's what gets me so excited, right? So I think that the truth is, I think everyone's leveraging AI a bit, and some people are leveraging it a lot. But I think that we're just scratching the surface in terms of the types of things that we can do, right? I mean, there's not a lot of connectivity between tasks. It's very sort of task oriented, and it's hard unless you're coding and you've hooked a few things up together through whatever Cloud Code and Replit, et cetera. Most of what sort of the average knowledge worker is doing with AI is a little more siloed, right? You go to the AI tool to do this thing, and then you pop out of it. But I will say, I feel like AI is kind of pervaded all sorts of areas that I work, and a lot of my sort of day-to-day tasks end up getting informed by and therefore sped up by AI, right? And it could be as simple as, I'm a superhuman user, so I enjoy the tools that they use in that email program, but I heavily leverage their AI tools. And some of it is their search is so much better with AI. So when I'm looking for something, I can just describe what it was. Hey, Colin and I had an email about a podcast. I think it was, early 2026. Can you find that? And it pops stuff up. And they also obviously have a bunch of AI tools for writing and replying to emails, things like that.
Hmm.
I have a full AI repository that I use for every company that I work with, and that essentially creates kind of a mini model because it's a data set of all the emails, of any recordings I have. I don't record board meetings, but I do record other interactions I have with CEOs through this platform, all the attachments, all the financials, board docs, et cetera. And then I can query that database and ask it questions, right? So I now prep for board meetings that way. I sometimes will throw a board package into Notebook LM and just, I always read the board package carefully, but I ask it to give me a, 20-minute podcast of what we're going to talk about at the board meeting. And I find that that's an effective way to have a different medium, right? I'm reading the board stuff, but now I get to listen to it as well. I'm just giving some examples of the kind of things that I'm using for AI. We didn't write any of the book with AI, but we have written a lot of summaries of the book via AI. I've uploaded it up, into OpenAI and Claude, and I sometimes we've done some articles. A magazine will say, "Yeah, we'd love to have an article, but we don't want to have an excerpt." I mean, that's a 50-hour task for me if I was to do it without AI. But I often will take a first draft and I spend real time with the prompting, so I'm very clear what I want, and I always edit the whole thing afterwards. But that's a great example of like how can I leverage AI to do some things that would otherwise take me a lot of time. And the same is true when I want to write a summary of some company I've been working on for my partners, let's say, or I want to give feedback to a CEO that we've been looking at their business, and I have notes from a bunch of different people in a bunch of different places, and I want to summarize that into a coherent email. All sorts of examples of where I think AI can be really, really powerful.
Yep.
Curious kind of where you're getting the most leverage. I mean, to me, that's a lot of leverage, right? I mean, that I definitely save probably a few hours a day when it really comes down to it. A lot of that I put back into work, but some of that I put into, taking a walk with my wife or, playing with my dog or something like
Yep. All important things. I mean,
that.
it's all just that resource, that finite resource we can't pay for, which is time, right? So,
Yeah, 100%.
obviously, it does the repetitive tasks. It looks through, it crunches numbers quickly. But what, in your view, would AI never take the place of human wisdom and experience? Where is it never going to be a benefit there?
Well, I've thought a lot about this question of like, will AI replace me? Like that for as a venture capitalist. And I think the challenge with something like that is that, and I've noticed this in when that example of like my book is in Claude and I ask it to write an article about this, is it sort of reverts to the mean. Right. And so I think one of the reasons I think that AI, at least not yet, is ready to take the role of sort of human judgment in something like venture capital is that it will revert to the mean, right? And you'll end up with an average venture fund, right? In the same way that when you write something with AI, you end up with an average sounding document. And that's why I edit it so heavily after that, because I want it to still be in my voice, even though I've trained it to some extent on my voice, right? There, I have a lot of content out there, and obviously I've taken the time to instruct my AI tools to try to sound like me, but it doesn't quite get it right. Now, some of that it may get better at, but I definitely think that the limitation right now is exactly that. It kind of reverts to the mean. And that's fine if I'm just writing a note to my partners where I'm like, hey, here's what's interesting about this company, or a response back to a CEO. Hey, here's, 10 things that we learned in our due diligence. It doesn't work when I'm trying to do something that is more involved than that.
Well
Does
said.
that match your experience, Colin?
Yeah, yeah. I mean, I think that there's the hope that it's just going to run with everything that's in our head without actually explaining what's in our head for a lot of people. And you really need to take the time if you're looking for a particular outcome to train it and to have it understand what your end goal is. Because if not, it's garbage in, garbage out. And that's been said many, many, many times, but it rings so true. The more time that you put to actually finesse it, kind of like an employee, train it right, give it a firm foundation, the more value you're actually going to get out of your tools and your automation.
So true. And I think it's actually something that people don't necessarily appreciate. Maybe the people on this, listen to this podcast do, but you do need to spend meaningful time in the training, right? You can't just, or in the prompting, you can't just sort of throw questions up there. I mean, if you do that, you're using it as search, and then that's fine, right? I mean, there's plenty of, I mean, it is a better search tool. Gemini in particular, I think works really well for this. And so, when I do want to use it for search, great, that's awesome. But if you want to use it for something deeper than that, yeah, you actually need to spend some time, give it some context, really be thoughtful about it.
Right. Well said. So as we wrap, and take a look at the founders, maybe even some potential founders that would reach out to you. What are some things in today's environment that either they would need to do away with, stop doing, or to understand that they really need to focus on first before they would approach a company or a firm like Foundry?
I mean, I think people are getting the message on this, but I mean, I get, I don't know, a dozen emails a day of people pitching me on something. And maybe this would be a good use of AI. I still am amazed at how many are relatively generic, right? And are pretty far afield. And the much more effective outreaches are when and I've been on both sides of the table because I've obviously have raised money. I have a startup company as well, so I've had to do some investor outreach with that. And the more effective outreach are where you actually spend the time. Like I always say to people, you're better off spending the time to send 20 very thoughtful emails than 200 that are just spams. And I think we're getting a little bit better at that, but I still get, I don't know, half of the dozen I get a day are I could tell are just completely generic, and they don't have anything to do with me or the firm or things we've done before, et cetera. And so, I mean, I think that's like, we should all endeavor to be more thoughtful in our outreach and use the tools that we have to be able to do that. Right. And I think that's, one of the things I like about, for example, Superhuman is it actually has all the context, right? If you and I emailed, at least from the same email address 5 years ago, I may not remember that, but it knows, right? And so I really appreciate, and I try to do that in all of my, my interactions, if you will. And one of the things that I think AI can supercharge, but it doesn't replace, is that sort of network building, right? I think a lot about community network connections. I spend a lot of time cultivating my network, and AI helps me supercharge that, but it will never replace the actual work of trying to be thoughtful about who and how I reach out to, and how I interact with them.
Yeah,
So
the human
there's,
connection for sure.
yeah,
To your point, I mean, when you get a card in the mail and it's handwritten, that's hand over fist, so much better than an email or something that's just been mass produced.
absolutely. One of my
Yeah.
favorite things to do is I bought some really nice cardstock because it's not that expensive actually. And with nice envelopes that have my address on them. And I will often send people, old fashioned notes, and I don't have great handwriting, so they tend to be pretty short. But, like, just a quick thank you. I really enjoyed it. Our conversation, whatever it is, like, people remember that. They really appreciate it.
Awesome. Well, you've given me some homework, and I've got to get your address so I can do that.
There you go.
Take
Yeah.
that example.
We'll send each other cards in the mail. Thanks for
There
having me
you
on.
go. Awesome. Well, Seth, I really appreciate it. This has been a very thoughtful, grounded discussion. You've got your long term view in a world that's very short term, And I think people really value and appreciate that. And of course, go out and get the book, give it a read. I look forward to sitting down and taking a look at it myself. So, where can folks find out more about Foundry and yourself?
Absolutely. Thanks again for having me on. Listeners, please smash the subscribe button. That helps a lot as well. Of course, go get the book. You can find out more about the book at thecapitalevolution.com. And you can find out more about me at foundry.com.
Awesome. Thanks again, Seth. I really appreciate it.
Collin, what a great conversation. Thank you.
Thank you.